Mr. Price Group is a value-oriented, mostly cash, fashion and home goods retailer with a market cap here of 42.9 billion rand. So it's still sizable. Trades on a PE of 18.4 and a dividend yield of 3.9%.
So I think everybody is familiar again with the group. It's Durban headquartered, although it incorporates assets like the old John Orr Group, which are really as old as Johannesburg is. Fabulous operators, really perfected the idea of fast fashion retailing in this market. Unfortunately, now they have a lot more competition in that space than previously was the case.
And again, at favourable pricing points, whereas you would have seen Mr. Price traditionally undercut the other retailers. Let's have a look at the share price graph. And also, again, not a stellar performance by any means there. We're languishing at below that 180 Rand level.
So you can see the market's not quite sure what to make of this one. Occasionally having a bit of a rally and a bounce because people think, well, crumbs, it's such a great performer operationally and now what? But then slipping back a little bit under the same general concerns as well as the specific concerns. Remember, fabulous, fabulous store footprint. On account of the way that malls developed in this country over the last 15 years, they are everywhere in tremendous retail locations, very high profile, very colourful, very attractive stores.
Is the share price graph then just a reflection of the tougher consumer environment?
I think it's a combination. It's the tougher consumer environment and it's also the concerns that just frankly some of their thunder is being stolen by some of these others, and we haven't even mentioned there's some others like Cotton On and Topshop. I don't even know what these stores look like because I'm not a big clothing shopper myself locally, but I'm hearing when the bags come back on the weekends, when my wife and my daughter have been shopping, those are the bags that I'm seeing there.
There's your analysis. That's your retail analysis taking place on the ground.
Exactly. Now they're going to malls like Sandton City, Hyde Park and so on, and that's what they're coming back with, which tells the story. That's where the perceived values are. The
long-term outlook, can they see their way through the international competition? Because that will be the key question here.
I'm pretty sure they can because the model is not broken. The customers are still there. There are many young people coming into the urban areas needing to kit themselves out for work, and it's a great destination for that.
But on a price for price point, those young people may tend to go for a brand like H&M over a Mr. Price.
It depends really where people are at. Also remember, Mr. Price done a lot of work on online sales and online specials that are accessible utilizing their app, and which is then done through a back-end delivery, so they've got nice
It sounds as though we should own Mr. Price in the portfolio, but we don't. Why don't we?
I think it's because the overall environment remains difficult and the foreigners that are coming into this market are still full of hope. They still think they're going to clean up here. So it's not like they're feeling like they want to slow down. What we've heard, and I'm sure you have too, is wherever Studdiford's is leaving a big major flagship mall, H&M is trying to sign up their leases as well. There was even an allegation that certain shareholders in Hyprop, which is the property owning company that owns the malls, was quite keen to see Studdiford's fall apart because they could then
secure H&M as a anchor tenant.
Yeah. So I'm going to say,
what about Africa for Mr. Price?
It's there. You know, they've done, particularly in the African region close to South Africa, lots of store rollouts. Again, not like they don't have a little bit of competition in that space.
So tell me, are you hot or
I think they'll be fine in the end, but for now I wouldn't be rushing in to buy the Mr. Prices of the world.